Excellent. Everyone knows the answer to that one?
Dave
Dave
Dravecki.
Dravecki.
So,
This email, do you want to, will you push this one?
yeah, let's push that to next week.
Okay. How's the sound for Robert there?
It's good.
Did you bring a makeup? I need a little makeup because I got a little
You or
thing
Robert?
here. What?
Are we gonna make up?
Yeah.
It's always kiss and make.
Kiss and makeup. There you go. You get my towel? Thank you. Ah!
Wow, that,
Okay.
that hit the mic. Yeah.
Anyone else need makeup?
Oh, thanks, we're good.
You good?
Thank
Whoa. All right.
I like that.
You like that? Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, Robert Schiff, and Lou Batmale. And when we cut to the second commercial break, we asked this trivia question. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he?
Yeah, we all remember that
Old
one.
Dave Dravecki.
Dave Dravecki, yeah. And I remember Will Clark running to the mound. And, you know,
Yeah, I saw that
oh,
game.
Man, that was sad.
I was
That
watching
sad.
that too. Yeah.
Oh, okay, email time. Mark, we received a couple of emails for you. One was from a borrower, one was from a lender.
Let's
or,
do the
or
lender.
Investor, so yeah, or investor.
Yes,
yeah,
we're talking about
investor.
investments in
Since
the
we're
last
talking about that,
segment.
so let's
Sure,
go for that
sure.
one. I've heard you mention deeds of trust on the show. How come I can't buy one of those from my financial advisor? That's a good
Oh,
question.
yeah, that's a good question. So, well, we talk a lot about deeds of trust or trust deed investing on this show. My company, Pacific Private Money, based in Nevada, we're a private money lender to the real estate community, and those loans are funded by private individuals who receive a promissory note and a recorded deed of trust, so it's a secured investment, and they receive income from that note, and it's a high-yielding, generally, income stream because we make loans generally anywhere from maybe 9 to 11%, and the investor who funds that note typically gets 1 percentage point below the note rate. So if it's a 10% loan, the investor in that note oftentimes gets would get 9% for the length of the term. And these are short-term notes, generally say 12 to 24 months. And the reason why you can't buy that from your financial advisor or your broker is because these are in a class what's called alternative assets. These are investments that are not traded like stocks or preferreds or other types of investment opportunities. They're not considered highly liquid and they're not traded publicly. These are private contracts that are made up between the borrower and the lender, the investor in the note. It's arranged by a licensed real estate broker, which Pacific Private Money is. In fact, we advertise loans to the real estate investor community. For example, we advertise to people who buy fix and flip and people who are buying rental property, et cetera, or people who own rental property and need to pull cash out. We market to that group. They come to us, they apply for a loan, we analyze their application, we quote them a rate we think will match up with our investor appetites.
Yeah,
And,
well, let me interrupt you for a second because one of the things, when you mentioned it's illiquid, that never really bothered me because the loans that you do are generally no more than 3 years.
Right.
So, when
They're
people
short-term.
when people buy a CD for 3 years, they assume it's illiquid because they're going to hold it for that period of time.
Also, Mark, you said that they were secured, and I don't know that people got clarification that they're secured by a deed of trust or a mortgage on a piece of real estate.
Right, in a mortgage in California is actually referred to as a deed of trust. In the United States, there are some states that are known as mortgage states and other states that are known as deed of trust states. In California, we secure a loan on a piece of real estate by recording a deed of trust. So, so we were talking last segment about ways to invest your money for an income stream, and investing in notes secured by deeds of trust, also called trust deed investing, is one way to achieve high interest levels of income. So let's say you invested in a 10% note that paid 9% monthly. It was a 12% note. You would first of all, you get a chance to approve the borrower and the property, so you're not lending your money blindly. You get a chance to look at various loan application opportunities. We put overviews together. I mean, pretty much everybody in this business does it in a similar fashion. You look at a loan overview. If you like the overview, you ask for additional information. If it passes muster with you, you execute a funding commitment so that we know we can draw up the loan documents with your name as the lender and the borrower's name as the borrower. When the borrower has signed the loan documents, you wire your money. You or your IRA or your trust, however you're investing that money, would wire the funds to the title company, and that money does not get distributed to the lender until
To the borrower.
until that deed of trust is recorded. There's insurance, title insurance, a lender's title policy ensuring your lien position, meaning we generally only do first deeds of trust, first position liens on the real estate. You get hazard insurance where you're named as the lost payee in case the house burns down. So it's insured and it's secured.
Well, the thing I thought was really interesting is the interest rate. So if they're earning 9%
Oh, yeah.
and it's paid on a monthly basis, that's 0.75% per month. I mean, right now you can't even get 0.75% for a whole year.
Annually, yes.
Yeah,
Right.
annually. So in 1 month you could make the same interest you'd make in a year.
When I first got into this business, the people who were my investors were generally people who were familiar with the real estate industry, like, Robert, like guys like you who were real estate agents, commercial real estate agents and residential real estate agents who had, saved their commissions up over the years, and they love to generally fund these loans because they understand real estate. They can very quickly analyze the property and go, oh yeah, it's a house in Marin. Of course, I'll make a loan on that. And we're only loaning generally no more than 65% of today's fair market value. But more and more in the last couple of years, all kinds of people have been calling us. In fact, my investor list has grown considerably. I mean, it's an unbelievably large number right now of people who have contacted me saying, "Hey, put me on your distribution list. I'd really like to look at these funding opportunities and what that has created kind of in the private lending marketplace, particularly here in the Bay Area, is that interest rates have actually trended down a little bit. We used to loan out money at 12%, and that's kind of trended down a little bit because there's more money looking to fund those loans, and competition makes pricing go down. So now we're doing sometimes we're doing loans to individuals as low as 8 or 9%, which was unheard of in the private money or hard money lending world, say 10 years ago.
Yeah, but it's still a lot better than
Still,
what
it's
they get in the bank.
8% rather than 1/8%.
Yeah, exactly. And you're basically the bank. So people look right now and they say real estate's at a fairly low price point. So whoever's making a loan of 65% on that new price point today is in a pretty safe position.
And you
So
probably, probably have a larger clientele, and it's going down because people realize how relatively secure that investment is compared to what it had been in the past.
Yeah, today it is a relatively secure investment. If you believe that that real estate prices have generally corrected, and they may go down a little bit in some markets in the next year or two, still, but probably not the 25 to 30 to 50% drop that some markets had experienced. And so, just to kind of come full circle to the question, trust deed investing is an alternative asset class. The only way to invest in a trust deed secured note, promissory note that would pay you, say, 8, 9, maybe even 10% monthly on your savings would be to go through a licensed real estate broker who specializes in private money lending, like Pacific Private Money.
Well, you've had a great reputation and great track record. So how do people get a hold of you?
Well, go to our website. We have a new investor website up, separate from our borrower website, so I will give you that one. That is pacificprivateinvestments.com. That's investments plural, so go to pacificprivateinvestments.com, or just call our office. We have a 415 number. We're here in the Bay Area. It's 415-883-2150. Tell us that you heard it on The Best of Investing.
And you can always go to bestofinvesting.com and check Mark out there. And Robert, here's an email that we got I know is right up your alley. How much does my FICO score affect the interest rate the bank wants to charge me? That's a great question.
Well, that is a good question. The FICO score could involve more than just the interest rate. At a certain point, it would involve not being able to get a loan.
Yeah.
So the FICO score is the first thing we look at when we're looking at a loan. And there are different banks that have different cutoff points, but at a certain point, it becomes very difficult to get a loan. And I think that's one of the reasons a lot of people had short sales or foreclosures in the past, and now their credit score is so low that they would have to go to people like Mark and get hard money loans at a higher interest rate until they spend a year or two clarifying and clearing up their credit scores.
Okay, and what kind of interest rates have you seen the credit scores get affected? You know what I mean? Like, if you have a score of 750, it's this interest rate. If you have a 650 score, it's that interest rate.
It usually is in a narrow band as long as your credit score is somewhere in the mid to high 600s or higher. And if it's, say, below 660 or 640, then it becomes more difficult. And it could result in a difference of a 0.25% in an interest rate, as long as
It could be
it's
pretty
high
significant,
enough to,
right?
yeah, it could be significant.
Now, at what score could you expect to be denied?
If it's in the, say, below mid 600s, you might be denied being able to get a loan. It also depends what the reason for the low credit score is. Is it that there was a foreclosure or a short sale, or is it overextending on credit, and really have to look at it. And also, when people go to mycreditscore.com and get their own credit report, it's not the same as we get when we look at a credit report for.
It's not a true FICO score.
It's a true FICO score, but
is.
it's not as involved as the credit reports we get for doing a mortgage.
Oh, okay.
And
Oh,
so
for
I've had
for
people say,
detail,
"Oh, my
that's
credit
what it
score is 700." I go pull it, and I say, "Well, it's it's in the low 600s," and then.
Oh, it's a big spread.
But if it is, there's ways that we have companies that can help people repair their credit, and sometimes that can be fairly significant and not take a long time.
Well, and what'll happen, it's kind of interesting because someone may have a low credit score for some quote silly reason. They can't get a loan, a bank loan, and then they're a perfect candidate for you, Mark.
Oh, yeah, for a hard money loan, but
Yeah.
then there's just a huge difference, of course, between the bank loan they were hoping to get and then probably
Sure.
the best rate I could get them.
Yeah, exactly.
Yeah, that's the big
Okay.
thing now.
Yeah.
Robert, you're quite the guru for mortgages. How do people, because you are a mortgage broker, people can refinance their homes with you, et cetera. How do people get a hold of you?
I'm at RPM Mortgage. You can check out our website. We're a very large private mortgage bank located headquarters in the Bay Area. You can call me on my cell phone, which is always available, at 415-515-1941. Or again, you can get to me through checking out the website for the best of investing.
Very good. Okay, we're going to cut to our third and final trivia question break. And here is the question. And this is a little bit more of kind of dumb sports injuries. Which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? He scored a touchdown. It was kind of a hard play, as I remember. And he smashed his head against the padded wall and sprained his neck. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Check them out. The weather's still great out there. Call 888-912-1190. That's 888-912-1190 to answer this question. Which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? I've done that before. That's no fun. Make sure to include your name, email address. Hello? Oh, yes. I'm sorry. I'm still reeling from the cement wall. Okay, email address. And remember to speak slowly and spell out your information for us, please. One letter at a time. And we'll be right back. I'm telling you, it should be illegal to have this much fun.
Nice. Gus
What
Farad.
is his
That's
name?
right.
Who? Gus
Very
Farad?
good.
Oh,
Gus Farad.
you had some real estate stuff?
I got this one right here, which is kind of a nice report on the
Oh,
value. This
gone
is the
up?
value-
Show it to the camera, though.
Yeah,
Can you
that's
focus
the
in on that?
There's the monthly cost of renting versus owning.
Right. So how do you know real estate's overvalued, and that's the bubble? So I don't want to say that. I want to say it's
Take a look, okay.
So right now, renting is much higher than owning.
correct. That's the way
If
it
I'm
should
reading
be.
that
It should
correct.
always renting should be always more than owning.
Renting,
It should be.
should be.
Yeah, it should. It shouldn't be this high right now.
Yeah.
But on average, it should be.
I
You
would
should make
think-
a
I would
profit.
think that rent should be less than owning.
Yeah.
Yeah. Rent
No,
should
to be
be.
if you're a real estate investor, do you want to make money?
I mean, for owning your house.
For owning your house, yeah. For owning your house, yeah.
But
It's
in
an
the
argument
last
for
year,
buying.
yeah, in
Right.
the last year and a half, I've had clients who have said, "Okay, my credit's cleared up. I'm ready to buy. I've been renting. The rent is going up now," and they put down 20%, and they end up such that their monthly payment, owning the house with taxes and insurance, is less than the rent was.
Yeah.
Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, Robert Schiff, and Lou Batmale. When we get to the third and final trivia question break commercial, we asked this question: which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? And Lou, you happen to know all these answers. Go ahead.
It was Gus Farad.
Gus Farad. That is
Yes.
correct. Very good. And you have some kind of very, very interesting real estate statistics for us.
Well, in the Bay Area, it is a different real estate market. I want to say that because that's our broadcast area, and there is a national tracking. Besides Case-Shiller and other indexes, there's actually one that J.P. Morgan does. It's really interesting, and it really, in my opinion, tracks the value of real estate. What we need to understand is how much my real estate really worth, and the true answer is, from an investment standpoint, it's whatever you can rent your real estate for versus your holding cost. You have a traditional 80-20 mortgage. What's that cost you plus taxes, plus upkeep, plus insurance? So to measure that gap, J.P. Morgan takes what's the average rental rate across the nation versus the home mortgage rate across the nation. And I'll say this, let's go back to a bad number. In 2006, okay, it was about $950 on average a month to own your home. To rent your same home, it was probably about $590. Okay.
This must be like some cornfield in Iowa, but
No,
go ahead.
But no, I mean,